Hi, this is Randy Finney with Right Side of the Chart, and this is a morning session update for Monday, March 2nd, 2020. I just want to kind of recap everything that I've highlighted today and last week. Starting out here with QQQ. We have an active trade on that. I'm going to share a couple other things that I like, or things I've already highlighted recently. QQQ, we're good. So far, it's good for about a 3.5, almost 3.75% or so. We'll call it 3.5% gain. And the basis for that trade, just to reiterate, and if I might not have made it clear in the initial notes, I covered it certainly in the video last week, but all this kind of stuff gets pieced together. So let me just mention again. What we had is a successful test and defense of the 200. Now, we went through it intraday, but as I talked about, that's not uncommon. In fact, it's almost to be expected. I would put higher odds when you're in free fall and this, strong downside momentum, what I call momentum field overshoot. You're falling almost vertically down to that level, and during strong sell-offs, you'll often overshoot a support level that will prove to be the one that holds. It should hold and did hold, but with what I call a momentum fueled overshoot. So that's what happened back then. 200-day was defended. We came in here. The drop wasn't as, from such a high level. We happened to hold it there, hold it there, hold it there. And so it's wash, rinse, repeat stuff. Can never guarantee that 200 would hold, but it did. And the fact that it did last week in reverse, that's where I felt more confident we'd see more upside, because we regained and closed back above it. We also hit that 219, and that's also the stop level. There's support right there. And now we have, by the way, a third in confirming a reaction off this trend line right here. That's one, a little one right there, two, and now three reactions. So there's a trend line to watch. So at this point, although I'm expecting more upside, leaning towards that, made that very clear this morning. That's my preferred scenario. Can't rule out that another thrust down, but if we do, we have a confluence of support down below. We have the 200-day still there, that 200-ish support, and the trend line now. Now, you might say, well, Randy, wow, if that breaks, wouldn't that then trigger a more powerful sell signal? And it would, technically, yes. However, not if it's just a quick jog down. And again, I'm not leaning that way. It's my alternative scenario. But if we do get it and break it and then relatively quickly reverse, it doesn't have to be the same day, but we regain the trend line, regain the 200 level, regain the 200-day moving average as well. That would give us on that 60-minute chart, which I drew out earlier for you, that scenario of a divergent low. So I'm talking about, my alternative scenario. It's still a possibility. I wish I could tell you that I had the utmost degree of certainty we're only going to go up from here, at least to hit those targets that I have, those near-term bounce targets. And that's all I'm looking at for now, is just bounce, get in, get out. But if we do take another jog down, I think it'll be a marginal new low. How far? Well, from the recent lows from last week, maybe 2 to 3% would be my guess. And again, hopefully we don't get it because I'm long. We have the official longs on the site, and I'm going to share a couple more for you now. But and so it's up to you how you want to manage that trade. You're already up. If you took QQQ last week, up 3% or so, you can either raise your stops, tighten stops, or leave it there. I had a relatively tight stop on that trade and still do. Or like I said, you want to have a tighter stop, lock in some profits in case we do take another leg down, or if you're looking for a much bigger move, you can allow a wider stop and allow for a thrust down there, and that's that's a likely target too, around 194 we'll call it. I'm going to move that line up just a bit here. Yeah, right around 194 if we do take another thrust down soon, because you had a key level there that was a resistance level on QQQ. It tried on 3 attempts, 4 attempts, finally cleared it right here. And if we get another leg down, that would obviously be I can tell you with certainty it's a support level. I can't guarantee it's going to hold, but I suspect it would based on that scenario that I showed you on the 60-minute chart. So let's focus on the upside potential for now, because we're rallying. And what I like about it is the market's stabilized. Remember, a lot of what was going on recently was forced selling, margin calls, funds scrambling, pension funds, pension plans, hedge funds scrambling to protect their downside, their mitigate their losses, selling, and so selling begets more selling. ETF and mutual fund redemptions too. But the fact that we reversed on Friday and now we have another update tells me it's clear that at least as of now the selling has abated. The buyers are stepping in, so we're not seeing that forced selling anymore, and that allows for people to say, hey, QQQ has dropped, into the lows. It dropped 16% in a week. Okay, how much? Again, I said this last week. How much of coronavirus, the impact on it, at least for the near term? Don't worry. I'm not worried about where the market's going to be right now, a year from now or 6 months from now. I'm looking, 6 days from now, 6 hours from now, because if we get that quick target, that second target hit, from where we entered, that's a quick 6% get in, get out, make it in just a few days is what I suspect. And I also want to say this, I have a potential third target up here. I may extend it depending on what I see in the charts. I may extend that, make that an official target somewhere up there. Completely up to you if you want to continue to raise or trail your stops up or raise them along the way periodically and hold out for more if we happen to get to that second target. Just want to go over the charts. As of now, everything looks good. 200-day was successfully defended, as well as a trend line, and that 200 is support level last week. I already showed you what the scenario would be for another thrust down on the QQQ 60-minute time frame. Again, it would set up. We don't have to have it, but if we happen to get there and when we see something like this, market takes another dump, another impulsive leg down, puts in divergence right here on the 60-minute time frame, that could set the stage for a more lasting rally. It would come from lower levels, number one, and maybe a full back test of this trend line up here. You might look at a 18% rally, and those are if you follow me for a while, I put divergences have a high weighting into my analysis. Divergent high, correction, divergent high. Even on SPY, we recently, last divergent low was pointed out back here, and that was good for, during the uptrend, that was good for a 5 or so % rally. So divergent high, correction. Divergent low, rally. Divergent high, correction. But they are not the be-all, end-all. You don't have to have divergent highs and divergent lows to have an inflection point or turning point in the market. And I'm focusing here on the 60-minute charts, but the basis for the QQQ trade last week, the entry on that was based largely on both the daily and even the weekly charts. As I told you, I would turn my focus to the weeklies after we started to get a half decent correction going on the 60 minutes. That's what I was saying back here, and we did. We got finally one of those divergent highs played out for a nice, really nice correction, and so there was plenty of money to be made on the short side. And fortunately, I didn't melt the whole thing down from top to bottom. Went long, reversed a couple times where I thought the market should have bounced. Made it, one or two of those successful, got in and out, and then got stopped out on the rest. But on balance, it was a good run down, and most of that being short. A couple long bounces, of course, going long last week on Friday, and still long now because I still expect more upside. And those are your targets. Let me show you one I really like. At this time, and I'm considering adding it as an official trade, but I usually don't add multiple index ETFs as official trades at the same time because they tend to move together. IWM, let me give you a different board here. I have a clean board right here. IWM has dropped in just 1 week, is fallen about 15% I think. Yeah, about 15%. And it's fallen to a very well-defined support level. This is a trading range that IWM has been in, or this is the bottom of the trading range, for a long, long time. In fact, it's been in this trading range with the exception of this meltdown. Remember, we had a little meltdown type. We were already in correction mode. We consolidated and then had that final thrust down, and we regained it quickly with a V-bottom. So if you look at this, and then this is the start of 2019 right here. So all throughout 2019, we traded in that range. We broke out. We had a little period here where we broke out, but we failed to hold the breakout. And that's also why you saw this waterfall selling. When that breakout failed right here at this point, that's bearish, very bearish when a breakout fails. However, it took us back down to a multi-year trading range. So this is where if you step in and buy IWM now, the small cap ETF, You're buying it where it was trading almost a year and a half ago. So whether it holds that level or not, look, if we're entered or about to enter a new bear market, then this level will go. I can tell you that. But at the very least, if we bounce back, to the top of that range right there, just as we did if you stepped in here, stepped in there, stepped in there, stepped in there. You're looking at about a 7% upside from where we're at right now on IWM. If you get to the midpoint of the range, I should put a line there. Sometimes you'll get reactions along the middle of a trading range or a price channel. So that'd be your minimum target right there, about 150. Temper it down a little, maybe round it down to about 150, 150, 152, somewhere in that. Let's just call it 152 right now. So there it is. IWM looks good. If we get a bounce. If we don't get a bounce and takes out this low, anything is possible, but I don't see another meltdown here. But you wouldn't want to ride it out if so. So if you take IWM here on or around that 145 support, you do want to stop. It's up to you. If you have it real tight, you're going to get taken out if we get that marginal new low, that scenario I was talking about on the indexes. So I don't want to give you confusion here, but I will say that I really doubt we're going to have a market crash right now. I think we're going to get a bounce, but you have to protect yourself at some point in case you do. You can't rule out a move down here to the 2018 lows. I don't think it's going to happen, and that's where a stop a little more loose, if you will, would allow for that little flush out move, one more thrust down and move up. But for now, let's concentrate on the upside because we are moving up, like I said, and we've been moving up since Friday. So I laid out my targets on QQQ. I laid out my targets. I think I gave you comparable targets on SPY. I think looking at this, just focus on these gaps. I think around that 310-ish level right there, 310.65 to 310 would be an ideal target. Again, I'm more focused on QQQ and IWM. I think there's a little more bang for your buck. Although SPY dropped about right on par with QQQ this time around, so it could snap back as much if you see money coming back into those large cap stocks. Let me show you the futures too. Futures, looking at NQ. My first target is here still at 8,700. Now that would be, we've moved up a little since this morning. I think this morning was about, we were down here and I said it would be about a 3.5 or 4% from where we were this morning. We're now about 1.6% away, and then T2 zone. So this is still what I favor right here. My preferred scenario has us going up, coming through here. May get a reaction on that 8,700 level, maybe not. I'll tell you, my preference is just sit tight. The more the buyers come in, the more people will see, okay, it's over. We're out of that meltdown panic mode. And again, maybe we get that corona fatigue syndrome where people are like, okay, all right, been there, heard about it. I'll talk about this real quick. Not that I am an expert, and I'm far from it in coronavirus. I'm not trying to pass myself off as one, but so far it's killed 3,000 people with about 88,000 cases globally. Let's put that into perspective. I have another chart here. Let me grab that right here. There it is. Here's the flu from the CDC. They say they estimate up to 61,000 deaths year-wide from the flu. Illnesses, cases in the flu ranging from up to about 45 million. All right, so look, coronavirus, it's bad. It's a bad virus, just like the flu is a bad virus, but just like the flu, coronavirus can be almost a non-event. You don't even know you have it, just like the flu. It can be mild, it can be severe, it can kill you. So what I'm getting at is sooner or later, people come to grips and accept it. There's just a new virus running around the world, making people sick. And again, I don't want to downplay it. And I don't know where this thing goes 6 months from now or a year from now, if it's even being talked about. Just like, swine flu and H1N1 and, bird flu, all these other things that were come and gone over the years. I think it's here to stay. That part I'm pretty certain. When you get it on every continent except Antarctica, I don't think it's going away. It's just a matter of, is it going to shut the world down? Are we going to continue to shut factories down? I don't think so. I think the world will keep spinning. And if I'm wrong, at the very least, I think right now this week. I think we'll get that little bit of abatement where people are just fatigued from all the headlines, and they kind of get back to business, and they look and say, hey, I've been wanting to buy Apple now for a long time, but it wouldn't let me in, and just going up and up and up. Well, here's your chance. As I pointed out last week, Apple's one of my favorites. Apple has dropped, let me turn off all the annotations. In just a week, 1 week, you had Apple fall about 20, what is that, 21% or so in 1 week. So, if you liked it up here, how do you not love it down here at 21% cheaper? Sure, there's been some production, delays and all that with the, factory shutdowns in China and stuff. But, okay, 21% you're buying Apple where you could have bought it back here. And keep in mind, this is why, again, I talk about the benefits of shorting stocks. Apple, I had pointed out, highlighted as a short trade. I give you targets which were hit and exceeded a few months back. So Apple, in just a week, fell as much as it took the stock 3 months to gain. It took 3 months to gain that much, move up from that level, and it wiped that out in about a week. And now, on the flip side, I also love, and this is why you'll see me try to catch bottoms during a strong sell-off like this when I know a big bounce is coming, because as a swing trader, this is when you make your money as a swing trader. When the VIX is high, when volatility has expanded, volatility cuts both ways, to the downside and the upside. So off Monday or Friday's lows, and I had pointed out at the time, Apple had come and hit that key 200-day moving average and that 255.74 support level. So there was a chance to step in and buy it with a stop, wherever you want. If it took that level out with conviction, the next stop would have been down here probably to 233, but it didn't. And so far it's rallied about 12% since then, since Friday's lows. So, here's a stock that was pointed out last week. You made 12% less than one trading session. You can either get out now. I can tell you the stock is at resistance, 285.57. That's these reaction lows right here. It's just the lows from last Wednesday, and the high from last Thursday, plus you're back testing the trend line. However, if the stock market goes up, continues to rally, then you could certainly take that out and run up here to that 303.65. So up to you how you want to trade it. You can take your quick 12%, get out, or raise your stops at this point to guarantee a profit and let it run and see if you can get 15-20% out of the stock, or maybe even more. Who's to say it can't go on to new all-time highs? Certainly this market has had plenty of corrections along the way, and each time powered to new highs. So now had some technical damage done recently, but on longer term charts, and again here on the daily chart, all this is as of this point in time is another successful pullback and test to the 200-day moving average on Apple, although it is below the trend line right there. So I'm not going to tell you that I think that I have very strong convictions on where it goes from here. I can tell you it's an objective time to either book profits or tighten stops up. That would be my preference right now. I'll just tell you that, is to tighten stops up, allow for a little bit of a give back. Up to you whether you want to put it under today's lows, a little tighter than that, and that then gives you the potential to see more, because we are seeing buyers step in. We're finally seeing, for the first time in a week, follow through to the abatement in the selling. Again, the selling sort of petered out on Friday, but at that point it was too early to say it was anything more than just a pause or a dead cat bounce. But now that we followed up today, QQQs are up 1.67%. I think you'll probably see more and more buyers step in. Shorts are getting burned; they're getting squeezed out. Those that stayed too long to the party, and their buying will create more buying going forward. All right, so that's that. Let's move on. I think I covered. Yes, I did. I covered the targets on NQ. I've shared those charts quite a bit recently. And the other thing told you I liked, is oil, crude oil. May make that an official trade. I pointed out last week we had this price channel right here on CL, crude futures. Nice, clean downtrend line informing this channel. We broke out last night. Futures broke out. We rallied up here to this level. We had some reactions there. So it's about 46.50 right now that we need to break. You can see we've been pushing against that level, and I believe if the stock market continues higher, crude's going to pop that level, and you'll have more bang for your buck on a crude long, or you should, no guarantees. Just move the line. That's the problem with this charting program, but I'd say drag that down. Yeah, you're still looking at about another, yep, that should be right at about 6% if it gets up here to that 40, 49.50-ish level. You might not want to hold out for every last penny there, step in early, sell it, or like I said, if it's your thing and you're not a very active trader, if you get in, it starts to pan out, just periodically raise your stops and let it run. See if it could do more than that. But that's what I'd be looking at now. That's what I'm looking at, is in and out, around that 49.63 level, 49.50. But I'll also see what the market's doing at the time, because crude and the stock market are highly correlated, and that's why I'm expecting a breakout here. In fact, I may add this one as an official trade. I threw it out to you guys last week too. It's official, unofficial. Like I say, doesn't matter if you like a trade. If I like something, I'm going to tell you I like it. It's just a matter of me getting around to mocking up the chart, listing all the price target levels. On this one I gave you last week, I did have right here, 1040 is the level I gave you on crude. So that would be on USO, and that would be about, another 6% or so, maybe a little bit better, almost 7%. That would be a minimum swing target on USO. I always get the questions because everyone loves the juice. They want to trade UWT if you don't trade futures. There's plenty of juice in CL. I don't have to tell you that. If you trade crude futures, you know that CL is more leveraged than UWT, and UWT is 300% leveraged. So there it is. It's about a 26% run up to that level, but you'd want to keep an eye on the charts of CL and USO. And helping to identify where to get out on UWT, but that would be a rough target range right there. Let me wrap it up here, get this out to you guys, and if I see anything else that pops up, like I said, my focus right now is on just these core assets. Their liquidity, they're easy to trade. You can buy QQQ, and you're buying Apple, you're buying Amazon, you're buying Facebook. But if I do see any individual stocks other than Apple, which I highlighted last week, that stand out, I'll let you guys know. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.